Hey, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial opinions, and make your own financial decisions. Today is Wednesday, January 4th, 2023, and this is Blockhead Traders Weekly. In this week's episode, I'm joined by fellow Blockhead trader Viper XL007, and we are going to talk a little bit about entering 2023 with a new 1% trade. We're also going to touch on a little discussion about regulation in the crypto space and just our thoughts on it. Nothing concrete, nothing amazingly profound, just a general discussion on what Viper and I think about regulation in the crypto space. But before we hop to that, I want to give a shout out to our Discord, a link in the description below. You can go in there and see each and every one of my trades, the good, the bad, and the ugly. Additionally, this is also available as a podcast wherever you get your favorite podcast. Subscribe today, and if you can't find it there, let us know and we will get it there. So let's hop to this week's content. So Viper, the first thing, before we kind of hop to the crypto discussion and stuff like that, markets are now afoot here in 2023. I'll say it's kind of off, not to the races, not to the races up or down for that. Kind of positive movement, a little bit of sentiment, a little bit of uneasiness. But let's just first drop in and see how our plays are doing. So let's just drop in and see how the 1% plays are going here. So this is kind of updated for the performance here. This KSS short vertical, this one actually expires this Friday. This is not looking good. This one is probably going to be a loser. So it expires this Friday. We're a good bit in the hole, down $67. There's a long gap. I'll pull up the charts real briefly after I run through this just so you can see where they fit. MCL, this is an interesting one. This is a long vertical on the put side of oil. This one has actually turned a corner with a dramatic drop in oil of the past few days. So this one is actually turning green. We're about $37 up on the trade. This one, we want to show you on the chart, is actually really interesting because we're pretty deep into the red as far as where the price action, or not price action, where the price target is for the trade. But because volatility is increasing and we bought the option, it's going up in value. If you remember when we opened that was one of the things I said, look, volatility is so low. Even if we get a run and a crash, volatility is going to rise, which should turn the option profitable. So that's actually in a good shape. And it's an interesting thing that is, in my opinion, unique to options that I want to show you. Then we have our $20 scratcher on Citi. That thing's doing quite well. We've almost got our money back as far as the paper goes. So that's up $17.50 or almost 100%. That's a much longer one. That one goes out to March 23rd. So things are looking good in that camp. The coin trade that we most recently put on, in my opinion, kind of not really going much of anywhere yet. Really kind of holding steady on its value. So we're down $1.80. But we'll see how that goes. And we're also going to touch on Viper. You hit the books and you found a trade. So good on you for that. So yeah, before we hop to that, Viper, I just want to take and graphically kind of show you guys the thesis of where we were when we enter these. Where is it? So remember, when I kind of enter these things on my trade that I want to show you, I put these green boxes because a lot of my trades are option based, so they're time based. So start of the box is when I open the trade, end of the box is when the option expires, and we're hoping to land in the green all the time. So this is KSS Coles. You can see my thesis was really blown. We dabbled down here in the red. We're probably going to hang out in the red and not recover. This one's just going to get chalked up to a loser. Fits in that max profit category. We take a look at oil. Oil, this is the one that I wanted to call out as really interesting here because you can see we are up here in this red zone. But you'll remember that's a 48% profit. And, we entered back here when oil was up. So yes, we're down a little bit. That helped a little bit from our entry. But the big thing here is you get this drop in price. I mean, quite a significant, two just massive drops in oil days. That really helps drive volatility up. And remember, we're long this option. So if volatility goes up, value goes up, and we're getting closer to the strike, which is why we actually could get out of this today for a profit. I'm going to let this ride, but I do want to call out that one of the thesis that I have when it comes to trading these setups is I'm looking for this channel, which we're in. Now, when we break this channel, this is where I really think my thesis is broken because that channel didn't contain the price. And really, when I'm out here in this no man's land, in my opinion, we're kind of starting to form a new trend, but it's not formed yet. And so the fact that we pulled back to the channel and then the channel didn't let it come back in, this to me would be a good time to say your thesis is blown, close this thing out for a profit. Yes, it's not your target profit, but you're not going to lose money, and wait for another setup. So for experimental purposes, I'm going to leave this one on, but I really should consider closing this one out because my thesis was broken and I have the opportunity to get out of here for not a loss. And then the last two real quickly is Citigroup. And like I said, this one is just so far from where we're, shooting to go, but you can see Citi is really gapping up here. We got earnings coming out in, a few weeks or next week, maybe. So we'll just see how that goes. That's a real long shot. It's a scratcher. And then the last one, Coin. If we take a look at Coin, remember Coin, we're trying to thread the needle here. So basically this was a condor. So we want to stay in this box that's right here. So we're kind of tilting a little bit to the upside. That's why we're down a little bit, but a little early to tell. So Viper, that's where we stand on our 1% trades so far for the year. I'm really excited that you have cast the line out there into the pool again, and you found a play in SPLK. So tell us a little bit about this one.
Yeah. So, first of all, avid watchers know I made the commitment last episode to start off the year, get out of the holiday lackadaisical trying to forget last year and jump into a play here. And I did. There's pieces of it that we'll get into that it might have been rushed, but all elements of whether or not it's rushed were calculated, were known, and thus became part of the experiment. So as you can see there, it's there's a couple things about this that don't quite fit some of the things we talked about with this play, with this challenge. So obviously you can see right off the top there, buy 2 shares at 86.98. So my drip has still been going. I mentioned that last episode. Even though I wasn't playing, I still kept up that. It's like $70 a week, I think. Whatever we averaged out all those numbers to be. So that's still going. And this play ended up being roughly 50, 40, we'll say 50% of my current capital in there. So position sizing, way larger than we ever talk about. So the only thing I want to say on that is some of that was calculated on, I know where this drip faucet's heading. I mean, it's just transferring these monies. I could do it all in one chunk, and then all of a sudden it's, not so crazy outsized. But trying to also balance that spirit of the challenge and show the constant drip and how that can build. So that's kind of why this is slightly an outsized position. And I mean, honestly, the other part was there just wasn't a lot available on my screener. I think I really need to sit down and rework my screener a little bit. There wasn't a lot available in the preferred size of ideally under $20, because I do want to try to keep featuring those sorts of plays. So this might be a standout, but it's what I could take. And so as you can see there, those 2 shares, the way that I structured the play, I have a max gain potential of $25.74, max loss potential of $8.56 based on my stop losses. So trying to keep up the 3-to-1 ratio that we talk about. And it was kind of based on the chart reading of flipping a key support resistance level over time. And then it was coming off of that, as we'll see in the chart in a minute. So that was the thesis, was that we regained that historical level and we were going to head up. And then the infamous Blockhead Traders Discord did what it does and facilitated conversation. And so I started not second guessing, but refining, my thoughts on the play, thanks to just very insightful feedback from the community, as we often say you can find in there. And so I've actually taken some partial profits on the play, and we'll get into all that on the chart. But basically, I closed one share at a decent profit target, and then with those profits locked, I pulled the stop loss up, so that way the stop loss is now a total play break even. So factoring in the profit that I took, if I hit that stop loss, I'll be break even on the whole play. So I'm not at my cost basis, but I'm at a break even where I can walk away now without having too much worry about losing anything. But we'll get into all that on the chart. But this is the general structure of how the trade's set up.
Yeah, Viper, I want to call out here that risk mitigation strategy. I really, really like that. I kind of touched just briefly on my comment a little bit ago on MCL, where potentially my thesis was blown. I could take profit and, try again. So any time that you can have any doubts in your mind or things where you can factor in, look, if I take profit here and I make this change, I'm still good on the trade. My original thesis can still play out, but you're taking risk off the table. I think that is a spot on thing to do. And one of the things, if you start reading about other traders, reading about success, it's not people finding the hidden gems that are the ones that make, the big time plays. It's really about your risk mitigation, which I guess is makes sense when you say it out loud. But I think a lot of people that are not in the trading business or not familiar with it maybe overlook that, and they think, oh, it's just a matter of, buy low, sell high, when really the most successful traders do so by, knowing when to get out, knowing when to reduce risk, knowing when to say, look, you know what, I'm a little uneasy on this. Let's take this off. Let's lower the risk. Let's keep the upside potential there. And that's what I really like about it. You can see graphically when we switch over to your chart here in a second, but I just want to give that a call out because I think that is a very wise thing to do, is to lower that risk and lock in profits, because that is what limits your downside. And as long as you keep pushing to the upside and limiting your downside, you're going to come out ahead.
Yeah, absolutely. And there was a recent trade that I don't think we talked about on the show, but it was an Ethereum trade I think I took, where I took it and then I didn't take profit on it, but I did take that risk off the table. Just read the chart, called it up, it went up, and then I pulled my stop loss well up into profit. And it was just one of those, like you said, it sounds so simple, it sounds so commonsensical, but just doing it. And then I was like, hey, wait a second. Getting into that mindset of comfort of no, now I'm good. I'm not, shooting the moon or anything, but I'm just making an incremental gain no matter what happens from here on out. And so that's been a mindset recalculation, just because it, like you said, it's so easy getting into this of, oh, you gotta strike it big to make it. No, you just have to find the probability of the next move. That doesn't mean trend or run. It's just the probability of the next move. Strike that probability and then walk away and go find it again, which is what we're trying to showcase here.
Yep, you're not going to win the marathon all the time, but maybe if you just focus on your left foot and right foot, one step at a time, you'll complete the journey. So.
Yeah. So let's take a look and then put some visuals to this play quickly, and then we'll get on with the discussion. So here's the chart, as naked as can be, just to kind of show what it was looking like. When I saw this, it popped on my screener because of this guy right here, which we can see as a historical. We can go all the way back in time and see that this is a historical level, of which we bounced off of and then lost and then have now recently regained. And so that was kind of what keyed my interest into it. However, like I said, I'm going to try to break down a little bit of what's evolved on this over time. But nonetheless, this was one thing. And then the other two factors that kind of factored into this was just acknowledging sort of these two channels here. And I'm only flashing these up here because I want to bring them back up a little bit later. But, this down channel is probably a little too sharp, but it was the best I could do for illustrative purposes. And then what was in my mind was this orange channel where we've clearly, as far as channels go, we've clearly reversed. And so that was on the back of my mind for getting into this. And I officially entered here, like I said, at 86.98. So we can see the entry here. I made that entry. We obviously slipped the level here, but then we came back up, regained, and I felt fairly confident entering here. I rushed the order in at 3:58 before the bell, which was good because then we gapped up on open. And so it was a decent day here on the position. So my original stop loss is a little hard to see because I'm intentionally fading it. Because like I said, I've updated the play. But originally it was down here at 82.70, which I wanted to put below the origin of this swing. Because if we break down below that, thesis is blown and we're out of here. And then my initial max profit target was up here at 99.85 because acknowledging the channel, acknowledging these higher highs, I was dangerously oversimplifying things to think, okay, well, this higher high was 95-ish and the next key higher high to test would be this 99.85. So I was like, well, just put the profit target up there and just wait. But that is where what we just said starts to get into that mentality of shooting too far. And that came out in that discussion in the Discord that is reasonable. I mean, expecting a test up here, we'll call the range 97.25 to 99.85, somewhere in there. That's reasonable. That's backed up, but it's also shooting a little too far because a lot can happen between here and there. So what ended up coming out of that discussion was one of our members who's much sharper and more in tune to price action swings and swing trading. He called out some important things. And the main thing was we have these higher lows here, but we had this one. And then it's not super nuanced. It's pretty obvious, but it's also, bias can blind you a little bit. We have a lower one here. So we actually made a lower high, which then the TA goes on to say that we should expect, coming off of that lower high, we should expect a test of this failure. And it's a failure because, we swung down and then we failed to do another higher high. So the expectation is that we should, coming off of a lower low, come up to test this, which is exactly what we did. Test this failure range. So based on that discussion, I started to realize some of the biases that played in, and those biases being, like I said, these channels that I marked. And I thought, you know what, this makes more sense. And I started to realize how that original profit target was shooting too hard. And so I was like, hey, we're up right now. 86.98. So I have 2 shares. And so I'm just going to close one of them out. And so I was actually a little sloppy. I got distracted. This isn't my full-time job, so I was doing work. So I didn't quite get the exit that I wanted, but I exited out here at 89.20 with 1 share. And that locked in some profit. So then I bumped up that stop loss, like I said. I bumped that up here to 85.85. Which now, is the break even of my profits taken, and my entry. So we're going to let that ride for a little bit and see what happens if we can continue the uptrend. But I am going to watch this action now a little more closely as the days go on. Go perhaps down at like the 5-minute or something to that effect, where I have the range identified now, and I really want to pay attention to, we obviously gained it and then lost it. So I really want to see us get back in there and start to do something to claim and confirm support off of this range. So we'll see how much time I can actually watch it. It's not really babysitting, but check in on it. Otherwise, the stop loss is there to just take me break even back to the beginning, and we'll see how it goes. One last thing, though, speaking of this bias that I wanted to call out, and I didn't show this to Sprocket because I didn't see it until just recently. This is where we're obviously talking a lot about testing out these channel theories and theses, and I think it's all sound experimentation, but I want to call out the dangerous nature of it and how channels can kind of help you paint whatever narrative you want. I think by now I sold everybody on these two channels here. But what happens if we zoom out on this 4-hour chart? And if we zoom out, this looks like a pretty strong downtrend channel when we come out here. And I mean, I took it a little bit further here. And I mean, now we're in this discussion of, which channels matter and which ones don't. And I mean, based on this larger channel, I don't know, maybe I bought the top, but I don't want to get too deep into analyzing this other than to say, this is something that as we go down this route of looking at channels, identifying channels and stuff, that there's a lot that we don't know. And we're going to continue to just kind of iron out and reason through and take small risk mitigations or risk ons as we continue to evaluate.
Yeah, and I think some of this kind of stems as to why I like the risk mitigation strategy here. If you can just add in those two channels that you originally had in your thesis. The reason I like this, probably selfish reasons, because I really am trying to go into this channel thesis that I'm working out, and maybe we'll look back in months from now and be like, what a moron. But we'll see. But what I like about this is the channel you identified. And one of the things that I've been finding with channels, at least back testing and going back and looking at them, if your downtrend channel, if you would extend that thing down, you don't have to do it. Once you break out of that channel, the thing that I've noticed a lot of times before new trends form is it will come back and test almost the top of that previous channel, which is about where that line would be if you would extend or grab that down, that first lower low or first low. Yep. Would kind of come off the top of that channel. And this is exactly what I was calling out in that MCL, where I'm like, look, my original thesis was blown because we broke out of the channel, but here we've come back and tested that. And so I really like your original thesis, and I get why there's uncertainty, and I totally understand and agree with that, lower low. So we're probably going to test the high and see what happens. And so that's why I like taking the risk off, but letting it ride to see if because your original thesis in this case is not actually blown. You're still within your original thesis. Yeah. But I like the fact that you now have uncertainty. So let's pull some of the risk off. And I really want to keep this one going to see how it pans out, because I'm looking for as many concrete, real life, I lived through this, not retrospective looking backwards, where you can kind of fudge things to fit your narrative pretty easily and not knowingly. We're calling it out, it's unfolding, and in a week or so, we'll be like, oh yeah, that was, we were wrong, or we were right. We'll see.
Yep.
So that's where the 1% trades stand right now. One of the other topics that's really been surfacing in the media lately, and Viper, you're probably more in tune to it than myself, the discussions largely driven from FTX collapse and all of the stuff that's going on there. Sam Bankman-Fried is putting in his not guilty plea. His, cohorts have already entered guilty pleas as part of their participation. And that just brings up this question of regulation, who's going to regulate? And there's some pretty strong camps getting formed in the crypto community that I like to think of, the sky is falling type people where they're like, oh my gosh, it's going to be the end if this entity touches crypto. And I just thought we'd maybe touch on that topic a little bit about, crypto regulation and where does it fit? It's not exactly exact copy of an existing thing that's traded today. It bears resemblance to things, which, there's just a lot of uncertainty. So Viper, what do you know about that aspect that you probably followed a lot closer than myself?
Yeah, so it's like you said. I mean, I don't think anybody, even if anybody watching this couldn't care less about crypto, they've clearly heard arguments and people talking about regulations and this, that, or the other. I highly recommend, the FTX Congress sessions, congressional sessions, were actually kind of interesting if you go and watch any of the super clips that say, like, the key moments from the hearing, because there's actually some refreshing takes from congressional leaders on crypto, and there's also, you get to see both sides, not in a left-right party thing, but just in a educated or semi-uneducated, or I don't even want to say it quite like that, but just just two camps of, there were congressional leaders talking about how the whole FTX thing is not an indictment on the technology, but it's an indictment on just bad companies doing bad things, which happens in all over the place. But then there's also frustration on the other side that says, if blockchain is this big technological leap for society, it needs to start proving itself. And we need to start seeing some use cases that actually benefit, some that fill some technological need, to better our interactions, better whatever, which I think is totally fair. However, I mean, those two arguments in and of themselves, I think, are somewhat a chicken and egg problem, because the people who are going to build those solutions that actually showcase the power of the technology are also hesitant until there's clarity on what the heck they're getting themselves into as far as regulation goes. And so there's this tug of war that I think is hopefully crescendoing. It's likely not going to resolve this year, but I'll keep, it's January 4th. I'll keep some optimism that something can happen in 361 days. But this tension between these two camps of do something and also we're going to wait and see what you do. And so I think that'll be interesting. And that's kind of the broad perspective from the outside. I think on the inside, as far as people that are in crypto now, there's a lot of similar misguidance and uneducated takes of what I would call maybe boogeyman theory of, first of all, regulation is bad. And that's obviously just not the case. It can be aggressively applied in ways that people don't agree with. But then the other thing is the security and commodity debate, and whether or not the SEC and the CFTC should be the overruling governor or regulatory body over this space. And there's a lot of this misconception around what that means. There's a lot of fear of like, oh, if the SEC comes in and this thing's and crypto's declared a security, it's over, and it's going to squash all these things. And that then leads to this natural bias of, well, if SEC bad, then CFTC good. And I'm going to straight up claim some ignorance of not knowing the full details of both parties, other than to think or know that I don't think it's quite that clear, that you can't be that black and white with both of these governing bodies, that there are clear different rules for securities versus commodities. But, the bigger debate, like you said, is where does it fit, period? And is it even a security or even a commodity or something completely different. And I think that's where we have a lot to go. And I'm encouraged by how many founders and people that are, have built massive blockchains or things like that are very willing to have this discussion and work this out with regulatory bodies. But it is an interesting state of things because right now, understandably so, all of these tokens, and when I say tokens, we're just going to focus on like what we've talked about in the past of L1, layer one tokens. So Ethereum, Avalanche, Bitcoin, Matic, that sort of thing, where the obvious natural correlation is to correlate that to a stock, which then represents a company and a share of a company. And there's, some of what I'm seeing in the debate of SEC versus CFTC or security versus commodity is as these tokens are released, a lot of these chains do an initial coin offering, an ICO, which they offer a discounted purchase of these. And so there's a lot of arguments that, well, that immediately classifies that as a security based on current security rules. And, I could see that, but also the token itself is more of a currency and a fluid thing that nobody owns the bulk share of. So it'll be interesting, but I think on that currency side, you had brought up even some additional rules that may apply.
Yeah, a little bit. I mean, that's currency and Forex are really kind of regulated by that CFTC that you mentioned, the Futures Trade Commission. And one of the things why I personally think crypto is, or at least those L1 tokens that you're talking about, are closer to a currency is kind of that there's not an ownership. There's not necessarily a finite number. There's not a valuation attributed to the ecosystem, right? So a company, you value a company based on its balance sheet, based on its income, its debt, its assets, right? None of that really exists in a blockchain, right? It's closer to a currency that has value because people say it has value, like a faith-backed currency. And it's almost like these blockchains, in my opinion, are more like independent countries with their own monetary policies on how do they generate new currency, what do they do with existing currency, and things like that. And some of those rules in those worlds are part of a blockchain and programmed. Some of them are up to a committee of people that can vote on it. And to me, that's very similar to central banks of, Japan or the US, where there's not really necessarily regulation on the actual currency, right? The US doesn't regulate the, Russian ruble or the European euro or things like that, the Japanese yen. They regulate the way that those currencies are traded in their realm. And I think that's kind of an interesting thing where, yeah, I get what you're saying with ICOs a little bit, but if you look at the broader ecosystem, a lot of the same parallelisms to a security just don't hold water. And that's really where I think you're going to end up with a little bit of column A and a little bit of column B. And, nothing is ever left or right. Nothing is ever A or B, black or white. Everything always resides somewhere in the middle.
Yeah. Yeah. And especially when you have such hard entrenched camps of the black and white, that's usually, personal opinion, one of those signs of the reality is not going to be to either extreme. And the fact that those extremes exist is evidence of how much more middle ground it's going to be. But a couple of things that I don't have, full knowledge of, and I think I've referenced one of them before and just haven't worked my way back around to doing what I said I was going to do to read more of it. But what we know is currently on the table was, I think it was back in May, somewhere at May 2022, the Biden administration had issued an executive order to tell all regulatory bodies, hey, go explore and go figure this thing out together. And it wasn't like a mandate of, hey, SEC, go figure out how you're going to do this. It was a very clear directive of all of you figure out which pieces and parts you need to own or how you can do your part. And so that's a really strong signal of, like what you said, the not black and white and the more gray, that at least the current administration would like to see that very conducive to innovation approach where, everybody owns their own role and, approaches it accordingly. The other thing was there's a lot of bills. There's two bills that I think are actually working their way through Congress, which are interesting to look up. Their names escape me. The Digital Act or something like that. And there's another one that I mentioned before, which I think Representative Gillum or something to that effect. If you start searching for crypto bills, bipartisan crypto bills, there's one in particular that really breaks down a lot of really sound judgment of which parts of crypto are most like securities and which parts of it are more like commodities. So like if we launched our own token, some blockhead trader thing, there's guidance for what that would potentially be classified as on a particular blockchain in light of a layer 1 token that is also governing that chain. And so it was just, when I skimmed through it, it was very refreshing because it was very much that middle, not middle of the road, but just very, gray of like, let's just do this reasonably. So maybe that's why it hasn't come out of committee. But I think, and again, personal opinion, personal bias, that's why when I'm looking into this space, I'm very interested because I'm already sold on the tech implications of the blockchain as a technology. So I'm also very convinced and very sold on the future of regulation. And so what I'm looking for in the space is I'm only interested in anything that can help showcase the tech and provide some social good or some service, and somebody that's just ready and willing to, jump at the regulatory bodies and say, yeah, we can do that. We can appease that. We can, and there's all kinds of stuff we can talk about as to where we think opinions, go on what those are. But that's just my personal slant on, we know it's coming. I think it can't come soon enough, especially as we see things like FTX, which just muddy the waters. Like if there was clarity and everybody could just understand, oh, they're just a bad company that did a really bad thing, that would put us all in a much better space. So I'm here for it and I'm ready for it, and yeah, we'll see. We'll see what happens.
Yeah. I think it will be a big day because I think there's a lot of money that wants to invest in crypto, and I think they're waiting for a signal for, hey, the water is safe, not from keeping them safe, but more from a fact of gaining legitimacy. And I think when regulation arrives, which it will inevitably arrive, that gains legitimacy and merit to the technology, which will just open up the floodgates of future investment and future money. And yeah, there's a set of rules that you have to play by, but that is kind of the give and take. And so I kind of think it is similar to a kid who's got a nice candy bar, and if he wants to eat the candy bar whenever he wants to, that's what he wants. But you make him eat some veggies and fruits, and they're going to throw a little bit of a fit. Doesn't mean that child's life is over. Yeah, sure, they might be disappointed. So I personally am looking forward to future regulation there because it's going to gain legitimacy. It will then kind of catapult more investment, more opportunities. And then to kind of go back to these camps a little bit, look at any industry, look at any company. There's no one regulating body over the company. I come from the automotive space in kind of my work history, and there are aspects of an automotive company that are governed by the SEC. There are also aspects governed by the National Highway and Traffic Safety Administration, NHTSA. There are also portions of the automotive business regulated by the Federal Communications Commission, the FCC. And so there's no situation where one entity is holistically governed or ruled by a particular regulating body. It is always a collection of bodies that take care of the pieces of that entity that fall in that jurisdiction. And I think the only thing that's missing is that taxonomy of when somebody says crypto, what is that taxonomy of what's inside of there, and where does that fall within each of the bodies under Washington, which was, the premise in that executive order from Biden to say, look, here is this thing. Go figure out which pieces fall in which swim lanes, and some of them will be gray and overlap, and that's where you should have discussions. But at the end of the day, it's really not oh my gosh, we've never seen anything like it. This is completely unrelated to anything that has historically ever happened. Like, that's just not true. I mean, we've called that out here. I've often said, man, if you want to teach economics on a hyperspeed scale, just go look at a crypto project of anything, because it displays so much of those theories.
Yeah, and I think the one thing you touched on there that I think is important, because it does play into my overall opinion and view of the future, and why regulations are absolutely going to happen, why it's going to be a good thing, because all that money that you said that's on the sidelines, I mean, I almost feel like it's that private investment money and corporations that want, I mean, they know they want to, they've built their company on making technological advancements and delivering technological services. They're getting, it's a bias. So my bias is showing, but it feels like they're getting antsy, and they really, really want to get in here, and they're collectively building this momentum that's going to then push Washington to make these declarations and this clarity. I mean, you've probably, if you've even done a Google search for crypto, I'm sure the Facebook algorithm has picked up on you, and you're getting hit with the Fidelity ads of get on the crypto wait list for Fidelity. Fidelity's advertising Bitcoin and Ethereum spot trading. So, I mean, stuff like that from an investment perspective that they want in. And then on the other side, there's, Square Enix, who makes the Final Fantasy games, has made a lot of enemies of their own customers by saying they sold off, to any gamers out there, they sold off the IP rights for Tomb Raider and Deus Ex, or however you say it, or Deus Ex. There we go. But they sold off these big IPs just so they could have money to reposition themselves to make this big entry into crypto gaming. And I feel like crypto gaming has gotten a little bit of a bad rap, but not completely unjustified. So we'll just say blockchain gaming. And so, I mean, there's these massive companies, Nike, and I mean, on and on and on, Disney, that they want to use this platform for the technological advances it can enable. And they're starting to get a little tired of waiting, but they also know they can't just go and risk too much. So I think that's going to become a little bit of a pressure cooker as well to get some of this rolling. Is now the people that are based in this country, the corporations that are doing it, are saying, hey, we want in, figure it out, because we're about to go, and you got to protect us. Yeah, to some extent.
Yeah, I think it's a little bit about protection, but I also think it's about predictability. So once something is kind of regulated and you start having rules in place, everybody kind of knows a little bit more about what to expect, how to design around it, how to design to it. Back to automotive, whenever somebody starts talking about new fuel economy, cafe standards or something like that, right? The automakers, they'll freak out about some of that stuff because they're like, oh my gosh, what if they say we have to make 100 miles per gallon, fleet average by 2028? Like, how are we going to do that? But as soon as that stuff becomes clear and they know that this is the target we're shooting at, they can now confidently put in the investment dollars. So for example, if there was, threat of something like that crazy fuel economy, right? Companies don't want to pour billions of dollars into that investment. All of a sudden to have somebody say, 30 is fine. Let's just go with 30, right? Because that's sunk cost. And it's that predictability that I think these companies also want. Not only legitimacy from the average consumer buying into the technology, but also the consistency for predictability on what they can expect, what they need to be building their company for, where to spend money. All that really plays in, and all of that is a byproduct of regulation in some way, shape, or form. So that brings us to the end of this week's episode. Like I said, 1% plays underway. We're going to keep tabs on them. Pretty happy with how they're going so far. We're really kind of jotting down. We're really kind of recording our thesis, the breakdown of those thesis, how they pan out. Actually, if you haven't been over to blockheadtraders.com, go over there because a lot of the 1% plays that I'm putting on, I'm writing up my thesis, my theory, my entry as a blog post, and let that be a record in time. We'll find out if I regret this many months from now, but I want this to basically be, this is the thought process. It's like the journaling I do independently of this, but more publicly. So hopefully you can at least pick up some good habits from this. Maybe you'll find some things that resonate with you and you can build them into your own flavor of trading. Never do I actually want anybody to copy exactly what we're doing. This is really just what we're trying. Pieces of this will resonate with you. You can reflect in on that. And that's really our goal. I'm really happy with where it's going. The discussion in the Discord around this is pretty good. So I'm excited to keep it going. And then additionally, just chatting about the crypto topic today, that type of kind of discussion is great discussion to have because it really kind of brings just different thoughts and things, perspectives and things to keep in mind as you consider, what does this mean? I've read about this person says this, and, just remember that there's a lot of different perspectives and opinions out there. And there's no one that is absolutely correct. Like, ours are not the end all be all. It's just a data point, and the collection and assessment of those data points are really where the end result ends up being. And what does it mean for you? Where do you see it fit? And hopefully there are more higher level things that bring, we can gain consensus around, like regulation in general will probably facilitate expansion. Like, whether it's good, bad, the other thing, yeah, we can debate that, but hopefully there's a meta topic in there that you can pull out of that. So good discussions this week, Viper. A lot happening in the market, a lot of bright new year, a lot of high hopes. Hopefully we won't have one of those terrible, no good, very bad market years that just goes down and down and down all year like 2022. Hopefully we can get some nice upside movement and things like that to get those endorphins going in our brains. But good luck out there, everybody. Have fun. And remember, think outside the block.